Welcome, everyone, to Advantaged, an Alloy Partners podcast. I am Drew Beechler, our VP of Marketing here at Alloy Partners, and your host of the Advantaged podcast. Alloy Partners is a venture builder. We partner with leading organizations and entrepreneurs to co-create advantaged startups and venture studios that help unlock growth and transformation. And here on the podcast, we interview corporate innovators, founders, and investors all around venture building and startup corporate partnerships. We are telling the stories of how corporates and startups win together. And today we have myself along with Tom Schneider. Welcome, Tom.
Hi.
Tom is the senior manager of venture building at DSV, one of the world's leading transport and logistics providers. Tom was part of Schenker Ventures and their venture building team prior to being acquired by DSV recently. And he's been on quite the journey building ventures, particularly in the logistics space, and is fully dedicated to one of the ventures right now that they spun out of, Schenker Ventures. And so we'll get into a little bit more of that later on in the show, which I'm really excited about. But just to start with, Tom, could you just give a little introduction to yourself and share your career story and how you got into venture building specifically?
Yes, definitely. So I didn't start working or studying and plan to be a venture builder, right? My background is industrial engineering and with a very big focus on mechanical engineering, right? Because math and physics, I was good in that, so I just gave it a try. And then I started industrial engineering, right? As mentioned, went to Munich. I was part of the Volkswagen group for a few years, 6 years, focusing a lot on commercial vehicles, autonomous vehicles. How can they park? How can they drive? How can you basically interact with these vehicles on the big logistics areas of the world, right? Or in the world. And this is the first time where I got really in touch with business modeling, right? Especially if the driver is not part of the vehicle anymore. We have a lot of opportunities with data and database business models to really create new value for OEMs, where others were basically in this field before. Right. That was super interesting for me. And parallel to that, I was self-employed because I really like building new ideas from the ground up. And then thought about, hey, why not doing it for others and doing it for myself? So this was basically then my side job, helping a few customers, validating early stage ideas, right? Because what I've seen in the past, especially with big corporates, is there are a lot of good ideas, but they have a very hard time validating it, right? Don't really often know what is the market, how big is it, is anybody else out there, and how can we build the first thing there? So this is what I did there. I was self-employed then, as already mentioned, and then Schenker basically reached out over LinkedIn to me and asked, hey, Tom, we would like to balance both sides, being corporate and creating something new out there. Would you like to join our team? Because we believe you can both, because you have proven you can both. And yeah, then I joined Schenker, created a few things there, which we will, I think, talk about later on. And now I'm part of DSV, trying to create a legacy around NxtLog in the markets, right? So that's what I plan to do.
Yeah. Let's take a step back, maybe from NxtLog at least. What led Schenker to venture building and kind of this approach of creating new startups and new companies, new ventures out of Schenker Ventures? Why was it the right time for them to start doing some of this?
In logistics, you have a very low margin business most of the times, and especially if you are a 3PL, so somebody who is only managing the transports and basically organizing the global network, then you need to figure out what would be your next big step, or what is your next big step, right? Because there are new platforms like Project 44, I think it's a US company, that is jumping into the market.
I don't know if you knew this, we were an investor actually in Project 44 at the venture firm that I was at prior. So yeah, I have a little bit of experience. We were a small investor, but yeah, this has become a pretty big kind of upstart market for sure.
Yeah, exactly. And what they basically do is they start digital first because they don't have the old logistics service provider legacy behind them. And they go really full digital, full solution oriented and full data first. And basically try to go between the logistics service provider and the customer, and then basically organizing who gets which offer order and which money. So this is basically the goal of these platforms. And this is what Schenker recognizes, what the others are recognizing too, right? And this is why they said, hey, we have so many assets. We know where the things are. We have basically used every route in this world. We have thousands of customers. We know what they transport from where to where, right? And there need to be assets that could be leveraged in the market in a different way that we're not using today. And we believe, and then Schenker believed, that this approach, venture building, is a very good one, right? Because you start small, you use the assets, you try to build a company around, and then you create new revenue streams with assets that were not monetized before.
Yeah, we like to use the word experimentation all the time. That's really a lot of what venture building is around, is this relatively low cost, cheap, fast, just experimental motion that's very focused on lessons and learning. And how do you find the next big thing by creating these startups? Because they're built to learn. They are learning machines, if you will. And you all, I would say, were very successful in this as well. How many spinouts did you have? What was some of the success that you all saw while doing this?
We've done two things, right? So we had the studio, where we had minority shares as DB Schenker, and we had the big strategic ventures that were rather good assets, strategic investments, making sure the next big thing or the AWS moment for something like DB Schenker, right? In the studio, we ventured out 5 ideas, from which 3 survived so far in the markets. And how we basically did it was, right, we sent it out there with a little bit of pocket money, and they had a few months to win the first VCs or the first money, or even bootstrap themselves to success. And then they basically needed to live. If they don't manage to get the money they need in order to grow, then the idea was basically that, right? So this was our studio approach. What we learned is we were quite successful there because we understood a lot of market dynamics before we even ventured them out. So they had already a good head start and were able to use a little bit of assets that we had on the Schenker side. And from a real strategic venture building point of view, we started 5 ideas and 3 had 6-figure revenues after 1.5 to 2 years. And 3 of them were basically owned companies. One of these 5 ideas, which is not part of the 3, was quite interesting for a company in London, and they asked to create a joint venture around the asset that we created. But then it basically stopped a bit because we weren't able to take business decisions during the acquisition process like always. So let's see where it takes us. But it's, from my point of view, a very good outcome to have 3 out of 5 that already earn a good amount of money, and 1 that could be even a joint venture case with another company that is interested in it.
We talk about this quite a bit, and I'm just curious, what was the discussions in your scorecard, if you will, around how do you decide what is the strategic internal venture building versus what deserves to be a spin out to live or die on its own? What were some of those discussions? How did you all think about when it deserves one or the other, kind of from the strategic perspective?
We tried to create scorecards, but to be honest, if we would follow the scorecards, the view of the strategic ventures would be studios now, and the other way around. So I don't think this scorecard approach wasn't very successful for us, but I will try to make an example. For NxtLog, for example, is a sustainability topic, right? So with data and all around, but we will talk about this later on. We know that sustainability and decarbonization could be a unique selling point of logistics service providers in the market, right? And we know that with sustainability, there comes a premium. So we need to understand what the impact of sustainability on logistics and on the premium pricing is, very close to the core, because this could be one of the big strategic bets of Schenker, for example, in the future. So we know this is close to the core. Another idea was basically going into the factoring market, right? So basically handing out credit cards to drivers, and when they pay, they get a smaller factoring factor on it. And then basically the carriers have a higher liquidity and a faster liquidity in the markets, which is nothing of our core business, right? We don't want to go into finance so far, but we see that our network could help to really roll it out. So this was rather close or a little bit far away from core. So we said this is a studio deal and let's go for it. So it's always a case-by-case decision, but it depends heavily on the strategic playing field that the corporate define for themselves and if they fit into that or not.
Yeah, that's a really good point. I think with both of these, something that we talk about often as well is all around talent. And I think your background is very interesting too. You said why DB Schenker reached out and having a lot of that entrepreneurial plus the big co experience. But maybe just talk broadly. This is a major challenge that we always see, but what were some of the hurdles that you all saw, particularly within finding talent, incentivizing entrepreneurial talent to come and run and build these ventures, either internal or the external startups?
I think it started while we built Schenker Ventures, right? So everybody who joined Schenker Ventures already founded something or was in the process of founding something. So we try to get people who understand how to get from an idea to real market traction, because this was really important. Our goal initially was to earn revenue fast with new ideas and to scale it, right? We didn't want to do innovation stuff internally. We didn't want to have to educate the internal people because we knew this is a lot of time that goes into that while you're not creating any kind of measurable output on a P&L. So this was the first step. The second step that we then did, and it was a wrong step, to be honest, but this is why I want to mention it. So the second step was that we tried to work together with the standard consultancy agencies at this point, right? So this was 2021. They were good in their skills, but they were very expensive when you create a business case for a startup, right? So especially if you invest 3 months of consultancy into the early 3 months of a startup, then your business case is so exploding that you cannot even cover it again with the revenue. And then you already have a negative business case from the start on. So we learned that this is not working fully from our point of view. What we then did is there are a few cool companies out there that basically automated the challenge to freelancer matching. So we tried to work together with freelancers to get very specific parts of our problem solved. For example, if in sustainability, if you need some kind of legal support, understanding what other regulations that are upcoming, then you basically hire these people for 20 hours and then you have this information, right? So this was before GPT, Gemini, Claude, all the stuff happened on the markets, right? So I think this is important to keep that in mind at this point. And then what I always did was there are talent programs in corporates, and I really looked at the IT talents and the sales talents in these pools. And I basically gave them 3 months of startup experience under Schenker Ventures. And very often it was really easy to pick who is really eager to develop something and to be part of a startup. And sometimes you already saw that the people rather would like to be part of a corporate. And this is how we basically create our own talent pool, consumed it, and then basically grew the people who have the startup out there.
We talked about that a little bit beforehand, and I was hoping you would share that. I loved that example, and I think it's a great program and relatively easy, I think, for someone to copy, but I think it's a great idea around how do you build up and evaluate internal talent that can be directly placed into these two. And I think it's a great idea, particularly among young, eager, high grit and persistent talent that you might lose to going to a startup even as well, because they have that some of that entrepreneurial grit. But you get this time frame, you get to work with them and help build them up and mentor them. I think that's a great idea.
Yeah, and they have this hunger, right? They have the hunger to really achieve something. And if you give them the freedom to act, and if you are not limiting them on tools and things like that, then they can really get something done in the right way. And especially in the start experimentation environment, sure, if they are junior and if they're young, to be honest, we are experimenting, right? And even we are experimenting in areas where even expertise cannot be even built because they're so new. So why not let people develop themselves into experts in this field very young and very early, and then having them close to your startup because they see what opportunity you gave them. And these are the things that are the soft factors, how we manage to get people on board. When we talk about hard factors, that's a little bit harder for corporates, right? So when we talk about shares, when we talk about incentive bonuses related to success, to be honest, we really didn't find a good way to incentivize good talent from a monetary point of view. Myself, I was incentivized just with a normal salary and a small bonus. And I did this because I believed in the idea and I had millions of data sets from all over the world from a logistical point of view, right? So this is what motivated me. But I completely understand that when somebody is pouring 100 hours per week into an idea and want to scale it and want to make it big and basically creates the life around this idea for a few years, that they want to participate from it in a proper way. So that's for sure. And we had ideas and we had concepts, for example, with virtual shares that then at the end are measured on revenue and profitability, which would then mean a big bonus payment for the person, which is not a bonus payment to buy a car, but a bonus payment to buy a house. And in Germany, buying a house is $1 million or $2 million if you're in Munich. So these are options that we prepared, but we never got a chance to really implement it.
Yeah, that ownership incentive is so key. We've talked about that before too. And we focus quite a bit on that. It's a deal breaker almost, in that we need the founders to have significant upside and equity into the business. In the US, and this is very different, obviously internationally, but there's also just lots of tax implications in the United States. If you're a founder, there's qualified small business stock, like the amount that you can write off on taxes, it's like millions of dollars that you can save basically by having founder shares. And there's lots of tax incentives for entrepreneurs and for founder and investors in a lot of these companies as well. So even small things like that, but they make a huge difference of if the founder doesn't have shares in the company and they're just comped on a bonus or on hitting targets and salary, it just changes the incentives dramatically. And so there's a handful of those things too that are very important, at least in businesses, especially that are venture backed here in the US and in the businesses that I've started to run in the past too. Our rule of thumb is like, how do we make in the founding, treat this, if we're spinning out a company, treat it like what it would look like post pre-seed round. So then when they're going to raise additional capital, and that's the biggest thing, is how do you make sure that the future investors look at the cap table and they're not like, why does this corporation own 80% of the company? I don't really want to invest in that. But you have to be able to have enough breadth and space on the cap table for it to go on and continue to raise more rounds and more rounds. Or the other kind of side of that coin is you as the corporation have to be willing to carry all of those rounds down the road,
Correct.
Which could be $100 million. We're seeing Series A, Series B, $100 million AI companies. And so you have to be either willing to float that, or the thing that we talk a lot about as well is a great success metric is, have you built something that is attractive enough to the market that other investors want to invest in? And I think that's such a great metric to look at. But part of doing that is setting it up from a incentives perspective and the cap table perspective and ownership perspective in a way that makes sense. Obviously, very different in different international markets and things like that too. But that's typically a lot of what we see here in the US. And when we're talking about a lot of the startups here, and it's pretty parallel, at least with Europe in similar ways.
One important thing, I think, from a human point of view, right? It's just different if you know that the call that you make on a Saturday morning in order to reach out to a customer can have a huge impact on what you get out of it. Or if you say, hey, I could do it on Monday because the salary and the bonus is anyway coming in. So that's a huge difference. And it shouldn't be underestimated what accountability and therefore incentivization over it means. It would even mean, and I don't like to talk about fear or that people are afraid of failing, but if you're not hitting your targets and you have 2 months left from a burn rate perspective, then you're doing a lot of different things that you wouldn't do if you know that you're part of a corporate. And that's the difference. That's the accountability and that's the ownership, what differentiates a lot of founders in the open market from potential corporate founders or corporate ideas.
100%. Let's talk a little more about NxtLog in particular, just because there's so much more you can share on that, and you're spending all of your time specifically with NxtLog right now. But tell us more about NxtLog, where the idea came from, the decision now to spin that out, and what the story behind NxtLog.
It was basically my second or third day at Schenker, and they told me, hey, Tom, we have a very great idea for you as a venture builder. We like sustainability and we have a lot of data and we want to earn $1 billion with that. So please find an idea
Easy.
That's doing that. The first thing that I did was basically talking to around 30 customers of Schenker and trying to figure out a little bit. So I asked them, if you heard the buzzword sustainability, what do you think about, or what is happening with you, and what do you see already today? And a lot of these customers told me, hey, you know what, Tom? Sustainability so far, it's a nice metric in the CSRD reports, but it's very hard for us to understand what the cost impact on the P&L is, right? Because today, we don't know. It's okay to do it, and especially the European ones are a little bit more prone to do sustainability practices, but if you go somewhere else and you're just starting a business, you're not caring for the sustainability measurements that you have. But I already understood that they started looking at the regulations and that they knew that there will be some kind of tax systems like European trading systems for carbon emissions were on the horizon. They weren't able to really figure out what that meant, but I already saw that there's a gap. The second topic that they told me is today I'm working together with 20 logistics service providers. All 20 send data. I have no clue if I can trust the data or not. I don't know what they sent me. I'm not looking at it, but I know at some point I need to look at it. And then I need to make sure that it's correct. And the third topic is that they told me, hey, all my logistics service providers are coming up with these great ideas, how to improve my network. But if they only own 5% of my network, then it's only impacting 5% x 10% reductions. So I don't have the time to really focus on understanding what the big impact will be here, especially from a sustainability point of view. And this was the starting point. And what we then did, or at this point, I was alone in the team. What I did was I just looked into the data of DB Schenker for 10, 20, 30 customers. And I just looked at the transport data and analyzed it and tried to figure out how could I translate this into emissions. And I saw a lot of data issues. For example, Berlin in China, or there is an air transport over 12 kilometers from warehouse to warehouse. So there were insane data issues in the data. And so I saw These are data issues that one of the big logistics service providers have. So customers who are not taking care of the logistic transport data should have these issues too, and all the smaller carriers too, right? Because they don't have the time of a big corporate to really set up this data environment. So I understood, okay, data is key. If I could make their life easier from a data point of view, and if I could put together all this information that they have in a very easy, understandable format, this could be something that might be of interest for the markets. So what did I do? I sat there, created a small Python script, downloaded all my knowledge that I had from the manual data analysis, and basically connected my script with Canva. So Canva is this tool where you can create nice, beautiful reports, and basically said this was my first product offering. And then I went out to the customers and told them, hey, guys, I need this input data and you will get that. You can trust it because of X, Y, Z. And I basically mentioned what I did to the data, and then I made the first sale. Right, so I saw that customers are investing into a nice PDF format and a small Python script to get their data in a better state. So this was the first step.
Good example of find the easiest thing to ship and see if it provides value from like an MVP perspective. You didn't go out and build a product. You didn't have a fancy prototype that they had to go through. It was just, here's the PDF, and does this provide value or not? And if that provides value in that format, we could knock your socks off and make something truly amazing when we put this into a product or a software. I love that.
Yeah, and then we're in the discussions and the meetings with the customers. Then they look at the data and say, hey, Tom, I see, I was always thinking about switching from road to rail between Italy and Germany. What would be the impact? And for sure, you're then in there and say, that's no problem. I can calculate that for you, but I have had no clue how to do it, right? So I went out of the meeting. I Googled a little bit around and I found some external tools to put together. And then the next time I said, okay, this is the amount of emissions. I even went out to this rail freight brokers and asked them for real offers to make sure that I understand the price range, right? And the time that is there. And then I fused everything together, next nice PDF report, and sold it again. And what I have seen there is that as soon as you are in the meetings with the customers and they consume the information that you give them or the product, they think ahead. And listening there and understanding how and why they think ahead helps you creating already the next step within the customer environment that you have. And then we were at the point that we said, hey, we have a good customer group. We know what issues they have. We have the first smaller prototypes. And then we did a big mistake. We went out there and said, we exactly know how the product looks like. Let's hire a team and do it. We said the platform needs to be done first, right? And then people will come and then they will work on it. And they don't need a PDF report. They need way more. Then we built it for 6 months and we got no customers, right? And we had 2 months left of investments. So we had to lay off our whole development team again. That was a hard time, to be honest, but you had to decide, right? Do you let NxtLog die or do you give yourself 6 months more? And then we went out there and tried to understand what the issue was. And basically the issue was that we focused too much on having a nice front end and too less on real value creation through our algorithms. For the customer, it was more important that the data was clean in an Excel sheet than having only half of the cleaning logics in a nice, beautiful front end that they don't like to use. So that was a very good learning curve. It is obvious, but when we're down in the rabbit hole trying to set something like that up, you can easily forget that. And then, to be honest, the whole world changed with large language models, with tools like Cursor, now Google Anti-Gravity, all this stuff. And it's basically equipped me to perform on a good enough level as a full development team, right? Because then you have an idea. You say, okay, I would like to create an air simulation to understand what are the aircraft types that are out there and what could I recommend the customer. So what is the carrier like American Airlines or Lufthansa that the customer can fly with in order to get the best performing machine type from an aircraft point of view regarding emissions, right? And in the past, you had to set it up, you had to define requirements, then you needed some experts. What I did now was basically I had the data at my hands. Then we connected, my teammate and me connected it with some open source API, received for flight numbers, the aircraft types, and then we created a big Excel sheet. And then I basically dropped this Excel sheet into an app or a Claude or a GPT, doesn't matter who the provider is, and then said, hey, please create me a Streamlit app out of that. And then it created a Streamlit app out of it. And then I hosted it locally and I uploaded the customer data in it locally. And then we had the solution done. And then we pitched it to customers. And it took us 2 days to get from an idea to a first productized version that was able to show real impact with the real data of customers. And this is a game changer because it enables you to especially in B2B, to create ideas that people can touch and feel, which automatically increases the trust in you as an early stage startup that you can really deliver the value that you're promising.
Yeah, that's such a good point. Where is NxtLog now in its journey, and what is on the horizon for next year for NxtLog?
So NxtLog so far is closing now more customers, so we're on a good traction. We're still in a proof of concept, a minimum viable product state at the moment, especially trying to figure out how we can move away. So we know that cleaning data won't be a unique selling point for a long time because systems will improve. There will be now even AI enhanced data cleaning stuff on the customer side. So there are a lot of things that are happening on this side. So it's a good entry point, but it's definitely not there to stay. So we are now capitalizing completely on this decarbonization simulation and translating carbon emissions into the financial impact of P&Ls in the future, right? So we're trying to connect emissions with the financial impact based on regulations, operational costs, things like that. And my vision for NxtLog is that when you share your transport network with NxtLog, you have the global opportunities for decarbonization transport networks at your hands, and you see exactly the simulation on emissions, lead time, and cost impact for each and every of your lane. So you can just by click decide who you want to work with, and then understand ultimately in 2030 and 2040 is how much worth is €1 invested into my supply chain today. Is it 5? Is it 7? Is it 8? Is it 10? And what is the best financial decision to additionally decarbonize my supply chain too, right? So that's my goal. And what we are trying to do is exactly leverage this DSV network to push this service out to customers as good as possible with the data power and with the network power of DSV, and see how people react to it and how much value we can really generate in the markets.
Yeah. You've mentioned this already, but I'll just ask this in a concise way just to highlight it all. What's been the value of this being a DSV venture or a DB Schenker venture? Like you mentioned, the network, the algorithm data, but like maybe what are the 3 or 5 things that have given this just such a huge competitive advantage compared to if you were to start this completely outside the corporation and on its own?
I thought the golden resource of these corporates and companies are the key account managers and the sales operations people. Why? Because they are so deep in the customer networks and in the discussions, in the requests for quotations, in the tender discussions, in the quarterly business reviews. They know what is important for the customers. And if you have an idea, you have a very short way to leverage the knowledge of these people and the depth you're offering so it is hitting the nail when you talk to the customer directly. And the second topic is they can open doors and you have more than warm leads in the network that you can access. And that's insanely important. If you see how much money lead qualification, lead outreach tools cost and what evaluation they have in the markets, you know how hard it is to target your ICP in the best possible way with a low customer acquisition cost. That's what companies can do and corporates can do. And this is my number one favorite, working together with them, right?
It's huge. It's such a big, important difference, and it just completely changes the trajectory of the company, that network effect for sure.
And the quality of the product, right? It's insane how big the quality is after you have refined it with the salespeople that really know what's happening out there, or with the operations people, right? If you want to create a warehousing startup, and you have 3,000 warehouses all over the world and people who do the job every day, and they are basically the user group at this point, then you don't even need to go out to a customer who have a different warehouse. You go into this warehouse and you test. And you are the same company, so you go there. You don't have to ask, you go there and you bring some sweets with you so people like you, and then they talk to you and you understand a lot. And that's the stuff that's really good. The second topic is the sheer amount of data that you can get your hands on. For sure, it's somehow hidden in SAP systems or an ERP system, and it's painful to get to it. And then you need somebody who understands the columns and what the data is all about, for sure. But when you have the data, that's something that companies just build years of products for in order to get access to this data, and then you have it. And that's something that you get way faster with the corporates. And this is why I believe it's very important for corporates to have good data catalogs, to understand where the data assets are, to exactly enable teams like venture building architects or business developers to access this data and really make sense out of it in their own context, right? So that's really important. And the third topic, and it could be, it's sometimes helpful, sometimes it isn't. It's the brand and the trust in the brand. So if you go out there and you say, hey, you are a startup that is supported and funded by DB Schenker, I would like to get all your transport network data of the full year. Then there are two options. The customer says, great, DB Schenker is amazing and they're doing logistics. So when they invest in you, they trust you, so I trust you. So that's the first logical step that a few customers do. Other customers say, ooh, it's DB Schenker, it's a startup, they want to get my full data set. That's hard, right? So you need to find the sweet spot between brand recognition and having the neutrality where needed. And very often companies do that by NxtLog powered by DB Schenker with their own IT setup, with their own contract and stuff like that. So you try to combine the best out of both worlds.
Yeah, that's such a good point where you're contracting with NxtLog, not with DB Schenker. There's separation there. That's why we advocate a lot for the external approach as well, where it's not a fully owned entity, but they are able to tap into some of that brand power, but also still be able to move fast and be nimble and live and die on its own. One question I wanted to ask, and there's a lot here, but what are some of the biggest lessons that you've learned from building and scaling ventures inside a large corporation?
Testing is better than ego. So even if you think that your idea is great, give yourself a chance to be proven otherwise. Right?
That's great.
That's important. The second topic is validation only comes with revenue. If you are not selling what you're talking about, then customers might not even care about it. They try to be friendly, but they are not buying. And if they're not buying, they're not really interested in it, or it's not priority.
Yeah, buying is the signal, not just giving you good feedback or taking the call. It's putting your money where your mouth is.
Correct. The third topic is a founder should always build by themselves and be out there in the markets. I didn't understand sustainability a lot from a transport emission point of view, but I really worked a lot on understanding how this works, how the metrics works, how insetting works, how offsetting works, because only if you know the domain that you're working in, you can find the gaps and find the niches that you can fill out as a startup and then grow from there. All right, so that's really important. And the fourth topic is leverage the tools that people 4 years ago didn't have, right? So we have, I don't know, X thousand large language model CS tools. You have coding agents that basically enable every business user to really create a first prototype. Don't be afraid of testing things and using these tools. And now a lot of people talk about data security, and I don't want to share everything with my machine, right? So an idea is easy to copy. At the end, execution is important. So if you share the idea with the machine, okay, fine. But if you're already working on the executions, you're 2 steps ahead from the person or the machine that is analyzing your idea, right? The second topic is build your ideas with synthetic data that you can generate even with the LLMs, right? You don't have to put real transport data in there in creating your first prototype. You just need to understand your data model. So define your data model, create synthetic data, and then build everything around it. You're not sharing any kind of important IP knowledge with the machine. You're only basically sharing your concept with the machine, which the machine might not even interested in, right? At this point. So these are the things that I find really important. And to be honest, I'm surprised. I'm working with this stuff for 2.5 years or 3 years. And every day I'm surprised again how much it speeds up the process. So if you have just ugly data and you want to create a presentation for the customer, then you put it into a tool and say, hey, could you please make it more beautiful with the following design? And then within 20 seconds, you have the data that was in an Excel file beautifully visualized within your PowerPoint, and you have a customer adapted PowerPoint that is hitting the spot way better than the standard one that you once built and then try to adapt, but it's always very time consuming to adapt, right? But these are the things that blow my mind every day, and which from my point of view is the future of venture building. It's one man and one people armies.
Yeah, that's maybe a good segue into my last question for us here. I'm assuming AI is one of these things, but what excites you the most around logistics, AI, the future? What are you spending the most of your time on? What excites you the most within the spaces you spend the majority of your time?
So I went into logistics and recognized that logistics is a hidden business. So everybody who's going to the supermarket or to the big companies, there are products there on the shelves, right? And in the background, there's so much happening all over the world to get the product from A to B. And that's amazing because working in a business that is mostly hidden for all the others is quite interesting, first. Second, logistics is an old school business that needs to be transformed into how business should be done in the next 20 to 30 years. There's a lot of data, but the whole organization around logistics are not very data driven. So this is super interesting. So there's a lot of transformation that can happen and that will happen. And where we see how much LogTech ventures are getting funded at the moment, we see that people are investing into this and that they see there's an opportunity. And you know that every product needs to get from A to B. So imagine the market opportunity that you have with LogTech startups, with changing something logistics. It's insane. And I look at NxtLog companies and look at the global footprint of them, CO2 footprint. And if my algorithm that I created in 2 or 3 or 4 days of work as a prototype, if this algorithm could already show that you could save 10,000 of tons of CO2 just for one customer, and we have 300 of them, then there's way more opportunity to make these things faster, more reliable, more sustainable, and more resilient. And that's a playing ground. You can live 200 years and you wouldn't see everything. That's what fascinates me.
It's amazing. I love that the businesses in the background that you don't see, that aren't as flashy, the pipes underneath everything that make it work. And it's such an important business. And those are the ideas for me as well. They're the most interesting and the most opportunity and overlooked. I think that's where,
yes,
that's what makes it the most interesting too to me, because they're not front and center and maybe the sexiest, shiniest thing on everyone's phone that everyone's using from like a consumer perspective, but it's more in the background. It's a little more muted. There's just so much opportunity there, which I think makes it a ton of fun. Any last parting advice or words before we hop off here? I just want to say thanks again for joining me. And this is an incredibly fun discussion and great to talk about both NxtLog and what y'all do with Schenker Ventures is incredible.
One last thing. I believe it has never been easier bringing your idea to life than today. So everybody should be encouraged and shouldn't be afraid of doing it. And if you want to do it in logistics, it's a great area to do so. You can hit me up if you want.
That is great. I love it. Thanks again, Tom, for joining me. This has been another great episode, and we'll be back here with another episode in the future.
Thanks for the opportunity.